So since we are successfully done with SA 800, now we are going to start discussing SA 805. We'll try to discuss now what? The standard number SA 805. Let us try to understand from the material what is the title of the standard. What does the standard deal about? This is also talking about special considerations, audit of single financial statement, and specific element accounts or items of the financial statements. So what does the standard talk about? Special considerations. What are the special things which you have to keep in mind while you are conducting audit of a single financial statement and specific element, account or items of the financial statements? If as a practicing chartered accountant you are called upon to do an audit of a single financial statement, or you are called upon to do an audit of specific element, account or item of a financial statement, then what special considerations you need to keep in mind? Then what special things you have to consider? What special points you have to consider when as a practicing chartered accountant you are called upon to do the audit of single financial statement or single element, account or item of the financial statement? I know from the title you might not have understood anything. That's why I'm here to make you clarify on this point. So now, in order to understand what is this title of the standard, first we need to understand what is a single financial statement or what is a element, what is an element or account or item of the financial statements. So this we need to understand. So let me try to give you an example, which we'll try to understand with the help of one case scenario kind of thing. So take for example, there is a company TCS. There is a company TCS, financial year 23-24. So since it is a company, it will prepare financial statements for the financial year 2023-24. And as per Companies Act 2013, they will prepare all the complete set of financial statements. This TCS company for the year 23-24, as per the Companies Act 2013 requirements, as per the accounting standards, as per the Schedule 3, they will prepare their complete set of financial statements. What will be there in that complete set of financial statements? They will have something called balance sheet will be there. They will have something called statement of P&L will be there. In that financial statements, statement of changes in equity will be there. And also cash flow statement will be there. And even notes to accounts will be there. So the TCS company, when they have prepared the financial statements for the financial year 23-24, all these components will be there in the financial statements. So all these components collectively we call them as financial statements. All these items collectively will we call together as financial statements, we call them. Okay. Now TCS company, what they have done is they have appointed KPMG. They have appointed one of the big four entities, KPMG, to do the audit of their entire financial statements. Now what this KPMG will do, they will verify financial statements, they will verify books of accounts, they will verify internal controls relating to financial reporting. So all these things they will verify and they will give one audit report. In that audit report, they will express an opinion on the financial statements, whether the financial statements are giving a true and fair view or not. They give either qualified, unmodified, modified. So whatever it is, they will give one auditor's report. In that auditor's report, they will express their opinion on the complete set of financial statements. This is what regular audit, this is what normal audit which will happen. This is what normally which happens in each and every entity. Now, in this case, TCS is having one more requirement. They want only their P&L to be audited. TCS company is expecting to appoint someone to conduct audit of only the statement of P&L. So this is what we call it as audit of single financial statement. That means TCS is normally getting their accounts audited for the entire financial year. They're getting complete set of financial statements audited. In addition to that, they want only their statement of P&L to be audited, or they might want only the balance sheet to get audited, not the complete set of financial statements. They want only the balance sheet to get audited, or they want only the statement of changes in equity to get audited, or they want only cash flow statement to get audited. They don't want complete audit of the financial statements. They want only one single financial statement to get audited. Or sometimes not even a single financial statement also, they just want one specific item of the financial statements to get audited. Might be the TCS is asking someone to come and audit only accounts receivable, only trade receivables area and the respective provision for bad and doubtful debts. They want you to do the audit. Or they want you to do the audit of only inventory, only one of the specific element, account or item of the financial statement. They want you to verify only inventory. Or they might want you to verify only revenue, or sometimes they want you to verify only a specific note like contingent liability. They want you to only conduct the audit of contingent liability. They want you to conduct only audit of contingent liability. Able to understand? So like this, as an auditor, as a practicing chartered accountant, the companies in some special circumstances see this requirement of conducting audit of only single financial statement item, or this requirement of conducting only one specific element, account or item of the financial statement will not arise always. This requirement will not be there every time. This requirement will exist only in special circumstances. That all depends what will be that special circumstances. We can't list them out. So depending on the facts and circumstances, sometimes the managements of the organizations might get a requirement to conduct audit of either a specific financial or either a single financial statement or specific element, account or item of the financial statement. So take for example, this TCS is having a requirement of getting their accounts audited of either the single financial statements or a specific element or account or item of the financial statement. Now what they will do, if they want to get this thing audited, they will appoint some auditor. They will appoint some audit firm, or they will appoint some individual to do the audit of the single financial statements or specific element. Now TCS is also having two options. Either they can appoint the same auditor who has conducted the audit of complete set of financial statements. That is, either TCS can decide, okay, since KPMG has already done my audit of complete set of financial statements, let me appoint KPMG only to do the audit of only P&L, or let me appoint KPMG only to do the audit of inventory. So either the company can decide to appoint the same auditor who conducted the audit of complete set of financial statements to even conduct the audit of single financial statements also, or TCS is even having an option to appoint any another auditor also. Any another auditor, not just the auditor who has done the audit of complete set of financial statements. Any other auditor also can be appointed to conduct the audit of a single financial statement also. There is no objection to that. So might be here TCS is thinking, okay, since KPMG has already done my audit of complete set of financial statements, I will not assign the work to them. They're thinking that they're telling, I will allocate this work to EY. I will allocate the work to conduct audit of only P&L to one of the big four entities, EY. That option also can be taken. So here there could be two options. When you are a practicing chartered accountant, when you are called upon to conduct the audit of either specific single financial statement or specific element, account or item of the financial statements, there might be a case where you are conducting audit of complete financial statements also, and you are also conducting audit of single financial statement or specific element also. Both are done by same auditor. That also could be a case. Or it also could be a case where complete set of financial statements audit is done by somebody else and single financial statement audit is done by somebody else. Both the auditors could be different also. It is up to the management's choice. Whatever they wanted to do, they will do it. Understood now? So you all understood what is a single financial statement, what is a specific element or account or item of the financial statement. Now what does SAE 805 says is, if you are a practicing chartered accountant, if you are an audit firm, if you are called upon to conduct audit of a single financial statement or to conduct audit of a specific element, account or item of the financial statement, what special things you have to keep in mind. This standard is going to guide you as an auditor what special considerations or what special points you have to keep in mind, what precautions you are required to take, what procedures you are required to follow in order to conduct audit of either a single financial statement or specific element, account or item of the financial statements. Able to understand everybody? Clear and comfortable? Right. Next one. So next, sir, okay, we understood what is the objective. Now let us try to understand what are that special considerations. Here also they will say what considerations you will try to keep in mind, what considerations you will try to keep in mind while accepting such engagement. While accepting such engagement, what conditions, what considerations you have to keep in mind. So basically here also, when a company is approaching me, asking me to do the audit of a single financial statement or a specific element or account or item of the financial statements, first I need to check whatever financial reporting framework they are following. Whatever financial reporting framework they are following for the preparation of that single financial statement or that specific element or account or item of the financial statement, is it acceptable or not? Is it acceptable or not? Whatever framework, whatever rules and regulations they have followed in the preparation of that specific financial statement or that single element, account or item of the financial statement, is it acceptable or not? Sir, how you will decide whether it is acceptable or not? That will depend on what are the information needs of that intended users of that single financial statement item. So what are the information needs? why intended user, why that specific user wants that specific account item or single financial statement to get audited. So first I need to evaluate whatever rules and regulations they have followed in the preparation of that single financial statement or specific element, account or item of the financial statement is acceptable or not. And how you will decide that? I will decide it on the basis of what is the purpose of that single financial statement, who are the intended users of that financial statement, for what kind of purposes they are getting that single financial statements. So I will try to evaluate all these factors, then I will determine whatever rules and regulations I have followed, whether it is acceptable or not. Next, the standard says one more thing. See, take for example, if the complete set of financial statements, if the complete financial statements and single financial statements, if both are getting audited by same person, if both are getting audited by same person, you are in a comfort zone here. Why? Because for example, you are asked to conduct audit of P&L only. You are also the same person who is conducting audit of the complete financial statements, whatever their complete financial statements are there, that also you are doing the audit. Then you are in a better off position. Why? Because since you are the person who has conducted the audit of the complete financial statements, you will know about proper understanding of the entire entity. You will get to know the quality of their accounting system. You will get to know about their internal controls. So everything, you already have the information. With all that information in mind, you can easily conduct audit of specific item of the financial statements like P&L also. If the same person is conducting audit of the complete financial statements and also the same person is conducting the audit of the specific or single financial statement, then you are in a better position, then you are at a better off position. Why? Because since you are the same person who has conducted the audit of the complete financial statements, you will have lot of information regarding the client, you will have lot of information regarding their internal controls, you will get to know about their books of accounts and the quality of their accounting system. So obviously you will have more information. That information will help you out comfortably to complete the audit of single financial statement also. But when the problem will arise is, take for example, complete financial statements are audited by Mr. A, whereas single financial statements, the management has appointed another person. Mr. B was appointed to conduct the audit of the single financial statements. In these cases there will be a trouble. In these cases, there will be trouble when the auditor of complete set of financial statements and when the auditor of single financial statements, both are two different persons, then a trouble will arise. What trouble will arise? Since you are not conducting the audit of the complete financial statements, you might not have no proper understanding regarding the client's organization. Sometimes you will not be able to get proper understanding regarding internal controls, or you will not get altogether proper understanding of the entire company. Why? Because you will not perform risk assessment procedures and all. So you might not get proper understanding of entire entity. You might not know about no proper information regarding quality of accounting records, what kind of accounting software they follow, whether their books of accounts are reliable or not. You will not be able to find it out. Sometimes in order to conduct audit of a single financial statements, you might be required to put more efforts than required by the engagement. More efforts than required by the engagement. More efforts than required by the engagement. See, take for example, the management has given me, I will take the help of an example which they have given in the standard itself. The management has asked me to conduct audit of only accounts receivable. Management has asked me to conduct audit of only accounts receivable. But in order to verify whether this accounts receivable is appropriate or not, this will have even impact of SA 570 also, going concern related information also I might need to keep in mind. In order to conduct audit of accounts receivable, this might be even linked with my going concern also. That means in order to obtain audit evidence regarding accounts receivable, I need to even fulfill all the requirements of SA 570 also. We all know how much in-depth requirements of SA 570 are there. So just the client has asked me to conduct audit of accounts receivable, a small part of the financial statements. They are going to offer me some limited amount of audit fees, but in order to conduct that audit of the accounts receivable, I need to even consider the implication of SA 570, 560, so many standards I have to consider. So like this, in some cases, you might be called upon to conduct audit of a single item of financial statements, but in order to conduct that audit of the single financial statements, you need to have much more audit procedures, which is more than required by the audit engagement. Sometimes when you do the comparison of the purpose of the assignment and the work you have to do, that is very much unrelated. So like this, but if you have done the complete set of financial statements, you will not have that problem. Why? Because you would have already done that for the complete set of financial statements. But in case if you are only asked to conduct audit of single financial statements, these problems might arise. You might not get proper understanding of the entity's business. You might not get to know quality of accounting system. You might not get to know, you might be required to perform more efforts than actually required. See, if these problems are not arising, well and good. If these problems are not there, even though you are appointed to conduct audit of single financial statements, you don't have any trouble in understanding the business, you don't have any trouble in understanding the quality of accounting system, you are not required to perform extreme efforts, you can complete the audit within limited efforts, and there is no problem. You can happily go and conduct audit of the single financial statements. But in some cases, these problems will arise. Then what you should do, in case if you feel that uh, if you are appointed only to conduct audit of single financial statements and you are coming across these kind of problems, go to the management and say them, sir, it will be inappropriate for me to do single financial statements. Why? Because all these problems are there. All these problems are there, so it will be inappropriate for me to conduct audit of the single financial statements. Let us decide on some other engagement. Advise them what other engagement, what other kind of engagements you can do in order to complete that object, in order to achieve that objective. Whatever managements want to achieve that objective, you are not in a position, you will not be able to do the single financial statements audit or specific element or account of financial statements. Why? Because you are facing some problem. Since you are not the same person who is conducting the audit of the entire financial statements, you might lack understanding of the business, you might not know about the quality of their accounting system, you might be required to put more than the required efforts. So in that cases, go to the management and say, sir, in this case, it will not be appropriate to perform audit of single financial statement or specific item of the financial statement. Let us do one thing. We will work out some alternative engagement. We'll work out some alternative engagement like review engagement, or we will try to work out like related services or management consultancy services or investigation work. So we will try to do some other engagement which will help me to achieve your objectives. So you can go and suggest it. That means what they're indirectly trying to communicate is, if you are asked to, if you are called upon to conduct audit of single financial statements or a specific item where you are not the same person who is doing audit of the complete financial statements, and in case if you are facing such problems, better don't accept that audit of the single financial statement. Prefer to the client, advise to the client of some other alternative engagement. Clear? Able to understand? So these are the things which you are required to keep in mind while accepting such engagement. Now, when actually planning and performing the audit, then what you should do? So same as we have seen in the previous case, SA 200, we need to comply with all ethical requirements. We need to comply with all relevant standards. Wherever standards becomes applicable, all that standards requirements you have to comply. In exceptional circumstances, you can deviate from the requirements of the standards and perform alternative audit procedures. Yes, in some cases, you are required to departure also in case of extreme circumstances. Sometimes some standards might not be altogether applicable, then you can simply ignore that standards. Like for example, if your client is not having any related party, then SA 550 will not become applicable. You can ignore that SA 550 and comply with the remaining standards. So these are the requirements of SA 220. Then materiality, SA 320 also will become applicable here. You need to decide the materiality keeping in mind that specific item of the financial statement. So generally, when we are conducting audit of the complete financial statements, we determine materiality on the basis of the entire financial statement. But in the case of conducting audit of specific financial statement, or you are conducting audit of specific element or account of the financial statements, in those cases, you have to determine materiality keeping in mind only that specific part, not considering entire financial statements. So that materiality requirements also will be there. And there are some important things which we have to keep in mind when it comes to reporting requirements. These reporting requirements we will discuss separately. So this reporting requirements, we have to spend some time. This we will talk about it separately. But these are some things they ask you to keep in mind, like while planning and performing audit, you need to comply with the requirements of SA 200. Materiality also you need to consider. And finally, when you are done with the audit of the single set of financial statements or specific element of the financial statements, you have to express opinion. You have to give a report on that single financial statements or specific element of the financial statement. So how you have to report, what will be the reporting requirements, what should be the contents of the audit report, all that we have all together a separate paragraph. There we will discuss about it. So this is what the overall structure of the standard. This is what overall structure of the standard. Guys, able to understand? Everyone? Able to understand everybody? So I need a response from you. Just give me a quick yes so that we can proceed further. Make it fast, guys. So with all the background discussion, whatever we had, now we will start reading the content from the standard. So now we will start going through the standard SA 805. So let us see what does the standard say. Everybody pay complete attention. So first of all, they are telling what is a single financial statement. A single financial statement is to be distinguished from a complete set of financial statements. For example, a cash flow statement is a single financial statement item. Audit of only P&L is a audit of single financial statement. So like that, one specific financial statement item, we call it as a single financial statement item. What is an element of a financial statement? So why? Because in the title they are telling this standard is going to talk about audit of single financial statement as well as specific elements, accounts or items, right? So they have defined what is a single financial statement. Now they are defining what is a specific element, account or item of the financial statement. Let us see. Element of a financial statement or element means an element, account or item of a financial statement. For example, accounts receivable is one item of the financial statement. Allowance for doubtful debts and doubtful accounts receivable is one of the element of the financial statement. Inventory is one of the element or account of the financial statement. The liability for accrued benefits for private pension plan or recorded value of identifiable intangible assets. So like this, if you pick any item, that we call it as specific element or account or specific element or account or what else is we are saying, specific element, account or item of the financial statement. So just they are giving a few examples of elements or accounts or items of the financial statements. A single financial statement or a specific element of financial statements even includes the related notes, ordinarily comprising a summary of significant accounting policies and other explanatory information also. When I say specific element of the financial statements, it even includes notes to accounts also. As I've told, sometimes as a practicing chartered accountant, you will be called upon to conduct audit of only contingent liability. So as we all know, contingent liability is neither in forming part of balance sheet, neither forming part of the P&L, neither form part of the cash flow statement. It forms part of only notes to accounts. Sometimes you might be called upon to conduct a part of the notes to accounts also. That also we consider as audit of specific element or account or item of the financial statements. Clear? So this is what regarding definitions. So they have defined what is a single financial statement and they have also defined what is the element of the financial statement. Now let us talk about the considerations now. When you are accepting such engagement, if you want to accept, if a client is approaching you, sir, we want you to conduct audit of only single financial statement, or we want you to conduct audit of only specific element, account or item of the financial statements, whether you should accept such audit or you should not accept such audit, in taking that decision, what factors you will try to keep in mind? Able to understand this paragraph? So in case if the client is approaching you and asking you, sir, we want you to do the audit of a single financial statement, or we want you to do the audit of a specific element, account or item of the financial statement. If the client is approaching you and asking you to do the audit, now you have to take a decision. As a chartered accountant, you have to take a decision now. Should you say yes to that engagement or should you not say yes to that engagement? That is going to depend on some factors. So what points you are going to keep in mind in taking that decision whether to accept such engagement or not? Let us see. So first of all, you need to apply some standards. What standards we have to apply? SA 200. So all this I have already summarized. Just we have to start reading that in an elaborated manner. SA 200 requires the auditor to comply with all standards relevant to the audit. So when you are accepting such engagement, you have to make sure that if you have accepted the audit, whatever standards are there which are applicable for this particular client, all the relevant standards you have to comply with. In the case of audit of single financial statement of a specific element of the financial statement, this requirement applies irrespective of whether the auditor is also engaged to conduct the audit of complete set of financial statements. So in case if the client is coming to you and asking you to do the audit of specific financial statements or single financial statement, you are required to comply with all the standards. Whether you are the same person who is doing the audit of the complete set of financial statements or you are not the person doing the audit of the complete set of financial statements, all this doesn't matter. In case if the client is asking you to conduct audit of a single financial statement or specific element, whether you are the same person who is doing the audit of the complete financial statements or you are not the person who is doing the audit of the complete set of financial statements, all of this doesn't matter. You need to comply with all standards even for conducting audit of single financial statement also. If the auditor is also not engaged to audit the complete set of financial statements, the auditor shall determine whether the audit of a single financial statement or a specific element of that financial statements is practicable. As I have told, sometimes a problem arises. If you are not the same person who is conducting audit of complete set of financial statements, you will not get certain information. As I gave you examples of that also. Where they are there? So those examples are there here. Yeah, from here it will start. So this is actually linked. So C point they are telling, in case if you are not the same person who are conducting the audit of the complete set of financial statements, you need to determine whether conducting audit of a single financial statement is practicable or not practicable. When it will not be practicable, here from here they will say compliance with requirements of essays relevant to the audit of single financial statement or specific element of the financial statements may not be practicable. when the auditor is not also engaged to audit the complete set of financial statements. In case if you are the person who is conducting audit of only single financial statement and you are not the person who is conducting audit of complete set of financial statements, then you might face a problem that you might not be able to comply with all the standards. You might not be able to comply with all the standards. In that cases, it becomes impracticable. Next, in such cases, the auditor often does not have the same understanding of the entity and its environment, including its internal control, as an auditor who also audits the entity's complete set of financial statements. In case if you are not the person who is conducting audit of complete financial statements, in some circumstances, you will not get the complete understanding. You will not get the same level of understanding regarding the entity, environment, and its internal control. Similarly, in such cases, the auditor also does not have sufficient and appropriate audit evidence about the general quality of the accounting records or other information that would be required in the audit of complete set of financial statements. If you are not the same person who is conducting audit of complete set of financial statements, sometimes you will not be able to get the complete evidence regarding the quality of the accounting records also. Accordingly, the auditor may need further evidence to corroborate audit evidence required from the accounting records. In such cases, you might be required to obtain some extra evidences. You have to go beyond your single financial statement and obtain extra evidences. In the case of an audit of specific element of financial statement, certain SAs require audit work that may be disproportionate to the element being audited. As I give you example, in some circumstances, you are required to do more work, more efforts than required. You might be required to do disproportionate work for the assignment whatever you have accepted, for the fees whatever you are receiving. Beyond that, you are required to do huge work, even it could be a single item of the financial statement. So these are the circumstances where it will be impracticable for the auditor to conduct audit of single financial statements if you are not the same person who is conducting audit of complete financial statements. In those cases, what you should do, now they're coming to the point. If the auditor concludes that an audit of single financial statement or a specific element of financial statements in accordance with SAs may not be practicable, then the auditor may discuss with the management whether another type of engagement might be more practicable. In case if you felt no, here audit of single financial statements will not be practicable, go and discuss with the management, said this will not be practicable, let us work on some other kind of engagement which will fulfill your objective. Understood? So you will read here first C point. They are telling you need to determine, in case if you are not the person who is conducting audit of complete financial statements, will it be practicable for you to conduct audit of single financial statement? Sir, what factors you will consider? These are the factors you will consider to determine whether it is practicable or not. These factors you have to consider. So I'm writing it here. Read after point C. The study material, they did not give it in a proper order, so I'm telling it here. Read after point C. Not till here, everything. You also better write in your material. So this complete things you need to read immediately after C. C point telling you have to determine whether, if you are not the same person conducting audit of complete financial statements, is it practicable for you to do audit of single financial statements? Sir, how I will decide whether it is practicable or not? I will consider these factors. Will I be able to comply with all standards? Will I be able to get complete information regarding entity and its internal control? Will I be able to get the evidence regarding general quality of the accounting records or accounting systems? Am I required to obtain extra evidences? Am I required to do disproportionate work? All these factors you will consider, then determine whether it is practicable or not. If you have finally decided no, it is not practicable, what you will do? Discuss with the management with another and agree with them some other form of engagement where you as an auditor also will be able to do your work and management also will get their objective fulfilled. Discuss with them. Understood? Now, what else they say? SA 200 requires auditor to comply with all relevant ethical requirements. As I have told, even in the audit of single financial statements also you have to comply with all ethical requirements, including independence. What are the 5 ethical requirements? Integrity, objectivity, confidentiality, professional competence and due care, and professional behavior. Like the way you are required to comply with ethical requirements in the case of normal audits, even in the case of single financial statement or specific item of the financial statements also, you need to comply with all that ethical requirements. And also you need to comply with all SAs relevant to the audit. It also requires the auditor to comply with each requirement of an SA unless in the circumstances of the audit, the entire SA is not relevant or the requirement is not relevant because it is conditional and the condition does not exist. If you remember, same point we have covered in SA 800 also. I gave you example, like if the client is not having related parties, then SA 550 will not become applicable. You ignore that SA 550 and check whether rest of the standards are complied with or not. And this point also we have covered in SA 850. In some exceptional circumstances, the auditor may judge it necessary to depart from the relevant requirements in a standard by performing alternative audit procedures. So in some exceptional circumstances, you might not be able to fulfill the requirements of the standards. In those cases, you think of some alternative audit procedures and achieve that objective But in that cases, as I already mentioned, if you are deviating, if you are departing from the requirements of an SA, disclosure in the audit report will be required. You need to give a disclosure in the auditor's report. So these are all the considerations which you have to keep in mind when accepting, and even if you pay attention, they told about a few things regarding performing of the engagement also. Understood, right? So these are the things which you need to keep in mind. Now coming to the second part. Second part, they are telling acceptability of financial reporting framework. Nothing but whatever rules and regulations which they are following in the preparation of that single financial statements, you need to determine whether it is acceptable or not. How you will determine whether it is acceptable or not? On the basis of what are the information needs of the intended users, for whose purpose the single financial statements are prepared, for whose purpose this audit of the specific element is happening, what are their information requirements. I will keep that in mind and I will determine whether that framework, whether that rules and regulations they have followed in the preparation of the financial statements, or that specific element of the financial statements, is it acceptable or not. I need to determine. So this is the first and foremost thing which I need to do. Let us see what they are telling. SA 210 requires the auditor to determine acceptability of financial reporting framework applied in the preparation of that specific financial statement. So what financial reporting framework they are following in the preparation of financial statements, whether it is acceptable or not, I need to determine. In the case of audit of single financial statement or a specific element of the financial statement, this should include whether application of the financial reporting framework will result in a presentation that provides adequate disclosure to enable the intended users to understand the information conveyed in the financial statement or the element, and the effect of material transactions and events on the information conveyed in this financial statement or the element. I will tell you in a simple way what is the meaning of this paragraph. So the meaning of this paragraph is, in case if you are conducting audit of a single financial statement or a specific element, you need to see that whatever framework they have followed in the preparation of the single financial statements or that specific element, are they giving all information? Even in that single financial statements also, have they given all the information, all the disclosures which will make the intended users to understand that specific financial statement or specific element? That means even in preparing the single financial statement also, or even in presenting that specific element of the financial statements also, the management should have given all the relevant information which will help that intended users to understand that part of the financial statements in a detailed manner. Nothing but provide full information, provide the complete info for the single financial statements or that specific element. So write it here in the brackets here, provide complete info. Full information should be disclosed. All the related information to that specific element should be disclosed. Next one. A single financial statement or a specific element of the financial statement may be prepared in accordance with applicable financial reporting framework that is based on the financial reporting framework established by an authorized or recognized standard setting organization for the preparation of complete set of financial statements. So sometimes what will happen is, take for example, company is preparing their complete financial statements. Company is preparing the complete financial statements. How the company will prepare complete financial statements? On the basis of Schedule 3 and accounting standards. Now, when they are preparing a single financial statement, they are required to prepare some single financial statement and they want to get it audited. For example, they want to conduct audit of only P&L. Separately for audit, they are preparing the P&L. Now, even this P&L also will be prepared as per the requirements of Schedule 3 and accounting standards. In some circumstances, for single financial statements, there will not be any separate framework. Whatever framework that is getting followed in the preparation of the complete set of financial statements, the same framework will be followed even in the preparation of that single financial statement or that specific element of the financial statement. Next, if that is the case, that means if you are following the same framework which is applicable for complete financial statements, even for preparing single financial statements, if that is the case, determination of acceptability of applicable framework may involve considering whether that framework includes all the requirements of the framework on which it is based that are relevant to the presentation of a single financial statement or a specific element. So blah blah blah. So the summary is, in case if you are following the same framework which you are using it for the preparation of the complete financial statements, even for the preparation of standalone even for the preparation of single financial statements also, determine whether it is appropriate or not. Simply if I have to put it, determine whether it is appropriate or not. Determine the appropriateness, as simple as it. So whatever it is, this paragraph not that important from the examination perspective, but still I have explained it here. When I say something is not important, I'm not asking you to completely ignore it. Just you have to read it once and read it once. That is what I meant. When I said something is not important, I'm not asking you to skip that content. So today it is highly risky to say to skip any content. You should not skip. At least you have to read every content once. So this you have to read it once. Okay. So first you will consider all these factors. while accepting that engagement. Second, you need to determine whatever framework, whatever rules and regulations they have followed in the preparation of that single financial statement or that specific element, are they acceptable or not? That also you have to consider. Okay, now, so what considerations you have to keep in mind when actually planning and performing the audit? So let us see what they are telling. When you are actually planning and performing the audit of that single financial statement or specific element of the financial statements, what considerations you have to keep in mind? Number one, in planning and performing the audit of single financial statements of a specific element of a financial statement, the auditor shall adopt all essays relevant to the audit. Don't we know this? Yes, we all know this. So you have to comply with the standards on audit. When auditing single financial statement or a specific element of a financial statements in conjunction with the audit of complete set of financial statements, the auditor may be able to use audit evidence obtained as a part of audit of the entity's complete set of financial statements. What they say here is, if you are a person conducting audit of single financial statements also, if you are also the same person conducting audit of complete financial statements also, whatever evidence that you have gathered in the audit of complete set of financial statements, that evidence you can use it even for conducting audit of single financial statements also. There is no restriction. If you are the same person conducting audit of single financial statements as well as complete set of financial statements, whatever evidence that you have gathered in conducting audit of complete set of financial statements, that can be used even for conducting audit of single financial statements as well. SAs, however, require the auditor to plan and perform the audit of the financial statements or the element to obtain sufficient and appropriate audit evidence on which to base the opinion on the financial statements or on the element. Similarly, since you are giving the report on a single financial statement or a specific element, you need to obtain all evidence. That's it. You need to obtain sufficient and appropriate audit evidence before you express that opinion on that single financial statement or specific element. Next, the individual financial statements that comprise a complete set of financial statements, and many of the elements of those financial statements, including the related notes, are interrelated. So if you are conducting audit of P&L, that is highly related with other items of the financial statements also. See, in the statement of P&L, inventory will be there, closing stock we will show. That closing stock will be there in the balance sheet also. So if you are conducting audit of a single financial statement, that is obviously related with other items of the financial statements also. So that's what they are telling. In the individual financial statements that comprise a complete set of financial statements, and many of the elements of the financial statements are all interrelated. Accordingly, when auditing a single financial statement or a specific element of a financial statement, the auditor may not be able to consider the financial statements or the element in isolation. Even though you are called upon to conduct audit of only P&L, but you will not be able to, you cannot ignore all other items and verify only P&L in order to verify whether that P&L is correct or not. Sometimes you need to study its relationship with other items of the financial statements also. Why? Because all the elements, all the items of the financial statements are interrelated. Even though you are called upon to conduct audit of only one single item or one specific element, but it will have relationship with other items also. You have to do the audit after considering that relationship with other items also. Next one. Consequently, the auditor may need to perform procedures in relation to that interrelated item. Same, it is related to fourth point only. Since they are interrelated, you need to perform audit procedures on related items also. Like for example, if you are called upon to conduct audit of only accounts receivable, that is debtors. We all know that accounts receivable is having a close relationship with sales of the company. So when you are called upon to conduct audit of only accounts receivable, definitely you need to perform some audit activities relating to the revenue also, because accounts receivable is arising from revenue related transactions only. So they are interrelated. In case if they are interrelated, on that interrelated transactions also you need to perform some procedures. Furthermore, the materiality determined for a single financial statement or for a specific element of a financial statement may be lower than the materiality level determined for the entity's complete set of financial statements, which will affect my nature, timing, and extent of audit procedures. So as I've told, the materiality, when you are conducting audit of complete set of financial statements, you will determine that materiality keeping in mind the entire financial statement. If you are conducting audit of a specific financial statement or a single element, then what is material, what is not material, you will decide only from the perspective of that single financial statement or specific element. So that's why whatever materiality that we decide in the audit of single financial statement will be generally lower than the materiality decided for the complete set of financial statements. Understood? So these are the things which you are required to keep in mind while planning and performing the audit. Now, finally, after you have performed the audit of that single financial statement or specific element, you are required to form an opinion. Now, regarding the opinion, they try to say something. Let us try to understand it. Okay. So let me try to take you through this. Okay, so finally, once you are done with the single financial statement or specific element, whatever your opinion is there, you are required to express that opinion in the form of what? Written audit report. So let us see what they are talking about our opinion. SA 210 requires that agreed terms of the audit engagement include expected form of any reports to be issued by the auditor. So basically, when you are asked to do the audit of single financial statement or specific element, the management and the auditor both will draft the engagement letter, right? In the engagement letter itself, you have to agree on what should be the format of the audit report, what should be the content of the audit report. So the form and content of the audit report should be agreed in the engagement letter. In the case of an audit of single financial statement or a specific element of the financial statement, the auditor shall consider whether the expected form of opinion is appropriate in the circumstances. So whatever you feel it as appropriate expected form, in that format you have to give the auditor's report. The form of opinion to be expressed by the auditor depends upon applicable financial reporting framework and any applicable laws and regulations. So what kind of opinion you have to give, that all depends on applicable financial reporting framework. Like in case if you are conducting audit of fair presentation framework, if you are conducting audit of the financial statements prepared on the fair presentation framework, you will say the financial statements are giving true and fair. If you are satisfied, if you want to give unmodified opinion, if you are conducting audit of the financial statements which are prepared as per fair presentation framework, and you wanted to give unmodified opinion, what you will say? You will say financial statements are giving true and fair view, or they are fairly presenting all the aspects. In case if you are conducting audit of the financial statements prepared as per compliance framework, you will say if you are satisfied, and if you wanted to give unmodified opinion, you will say financial statements are prepared strictly, they comply with the requirements of the applicable financial reporting framework. Why? Because in the case of compliance framework, we are not required to check true and fair view. In the case of compliance framework, we are required to check whatever the requirements of the framework are there, are they strictly followed or not. Whereas in case of fair presentation framework, the main objective is true and fair view. So here we need to check whether the financial statements are giving true and fair view or not. So the wording which you will use in the opinion paragraph, that depends on the framework on the basis of which financial statements are prepared. In case if you are conducting audit of the fair presentation framework, and if you are satisfied that financial statements are giving true and fair view, and if you wanted to give unmodified opinion, you will say in your opinion paragraph, financial statements give a true and fair view, or they present fairly in all material respects. On the other hand, if you are conducting audit of the financial statements which are prepared as per compliance framework, if you wanted to give unmodified opinion, you will say financial statements are strictly complying with all the rules and regulations. Here you need not comment on true and fair view. The same thing they say here when expressing an unmodified opinion on complete set of financial statements. They are not going to talk about single financial statements. First, they are giving the general points on the complete set of financial statements. When expressing an unmodified opinion on the complete set of financial statements prepared in accordance with the fair presentation framework, the auditor's opinion, unless otherwise required by law or regulation, use one of the following phrases. What he will say? The financial statements present fairly in all material respects in accordance with the applicable financial reporting framework. Or he will say the financial statements give a true and fair view in accordance with the applicable financial reporting framework. When he will use this terminology when the financial statements are prepared as per fair presentation framework. However, if you want to express unmodified opinion on the financial statements prepared as per compliance framework, then what you will do? When expressing an unmodified opinion on complete set of financial statements prepared in accordance with the compliance framework, the auditor's opinion states that financial statements are prepared in all material respects in accordance with applicable financial reporting framework. Understood? This is in case of compliance framework. They did not talk about single financial statement. They're talking about general points regarding complete financial statements. Now they are coming to the single financial statements, how your opinion should be. In the case of single financial statements or specific element of the financial statement, the applicable financial reporting framework may not explicitly address the presentation of the financial statement or other element. In case if you are preparing single financial statements, there might not be a separate framework for preparing that single financial statements. This may be the case where the applicable financial reporting framework is based on a financial reporting framework established by an recognized body for the preparation of complete set of financial statements. I've already told you, sometimes you will not have a separate framework for the preparation of single financial statements. You will prepare single financial statements on the basis of the framework, whatever is applicable for the complete financial statements. As I have told, in the case of a company, we prepare complete financial statements as per Schedule 3 and accounting standards. In the case of a company, even we will make sure that single financial statements are also prepared as per Schedule 3 and accounting standards only. So in most of the cases, for single financial statement, there will not be any separate framework whatever framework that has been given for complete financial statements, the same framework even we will use it for single financial statements also. In those cases, the auditor therefore considers whether expected form of opinion is appropriate in the light of applicable financial reporting framework. So keeping in mind the requirements of applicable financial reporting framework, you will express your opinion. I know all this discussion is looking vague. The same point again and again they are telling, yeah, these standards are like this only. There is no much concept here. If you read all these points also, you will try to conclude, okay, sir, anyhow they are trying to say the same thing again and again. Yes, they will do it. I do agree with you. Next one. The factors that may affect the auditor's consideration as to whether to use the phrases present fairly in all material respects or give a true and fair view in the auditor's opinion include. Like for example, if you are conducting audit of single financial statements, or if you are conducting audit of specific element of financial statements, you have to give the opinion on that. In that opinion paragraph, whether you can use financial statements give a true and fair view or not, or if you want to use whether the financial statements give a true and or present fairly in all material respects, whether you can use these phrases in the opinion paragraph of the auditor's report of the single financial statements or not, it depends on various factors. It depends on various factors. So when you are giving opinion on the single financial statement or specific element, whether you can use the phrases in your opinion paragraph that the financial statements give a true and fair view, or they present fairly in all material respects or not. If whether you can use these paragraphs or not, that depends on some factors. Which factors are? Number one, whether applicable financial reporting framework is explicitly or implicitly restricted only to the preparation of complete set of financial statements. Whatever framework that you have used for the preparation of single financial statements is the same framework which are following even for complete set of financial statements also. You will consider that fact. Whether single financial statement or the specific element of the financial statement will comply fully with each of the requirements of that framework relevant to the particular financial statement or the particular element and the presentation of the financial statement or specific element, including the related notes and disclosure. You will check whatever single financial statements or specific element that is prepared, that is complying with all the requirements of the framework, including all the disclosures, including all the notes. If necessary to achieve fair presentation, they provide disclosure beyond the requirements of that framework. If necessary to achieve fair presentation, they are providing disclosures beyond those specifically required for the framework, or in exceptional circumstances, there is a departure from the requirement of the framework. They are nothing but repeating the definition of fair presentation framework here. So you need to check if you want to use whether the financial statements are presenting fairly or they are giving true and fair view, whether you will use these phrases or not, that will depend on some factors. You will check whether single financial statements are complying with all the requirements of the framework. Number two, you need to check for exceptional circumstances in order to achieve the fair presentation, are they deviating from the requirements or they are providing additional disclosures. So the ultimate objective should be, if you have finally decided even the single financial statements are also giving a fair presentation, then you can use the phrases in your opinion paragraph, present fairly in all material respects, or they give a true and fair view. Next one, the auditor's decision as to expected form of opinion is completely a matter of professional judgment. Sir, in what format you will give the opinion, that is completely depending on the professional judgment. It, it may be accepted, it may be affected by whether use of the phrases present fairly in all material respects or give a true and fair view in the auditor's opinion on a single financial statement or specific element of a financial statement in accordance with fair presentation of framework is generally accepted in particular jurisdiction. In most of the jurisdictions, you can follow whatever reporting requirements which are given in the applicable financial reporting framework. Nothing but whatever reporting requirements that you are following in the case of complete set of financial statements, the same requirements you can follow in this single financial statements audit also. So this paragraph is very, very vague. I do understand it, but yeah, this discussion is going to be very clumsy. I will quickly repeat whatever I have explained in each and every paragraph. Okay, right. So once again, quickly, I will revise this paragraph specifically. Come on, guys. You also participate with me wherever possible. I will try to write you the summary points also. First one, what should be the format of the opinion? Audit report. Format of audit report, you have to agree in the engagement letter only. So I'm writing the summary for the help of with which you can understand it. I'm writing here the summary. First point, summary you can write. Agree in engagement letter regarding form of report. In the engagement letter only, you have to decide. Next, Second point, this entire second point, it talks about wording of the opinion paragraph. The second point is completely talking about wording of the opinion paragraph. If the financial statements are prepared as per fair presentation framework, if the financial statements are prepared as per fair presentation framework, you will use the phrase present fairly in all material respects, or you will use the phrases the financial statements give a true and fair view. Any of these phrases you can use. In case if you are conducting audit which are prepared as per compliance framework, you will use the phrase, what you will use the phrase, compliance framework, specific terminology what they use here. Okay, financial statements are prepared in accordance with the requirements. Financial statements are prepared in accordance with the requirements. With the requirements of framework. Here we will not talk about true and fair view. Why? Because in the compliance framework we know true and fair view will not be there. So keep these 2 points under bracket and write this. This we already know, just they are reminding us. This is what the phrases which we use. So copy this, write this. Since all this discussion is a bit clumsy, I'm helping you out for quick revision and quick understanding. Okay, so just write this. Covering these 2 points, write this. Make it fast. Or else quickly take a screenshot. I will proceed further. Right, next, coming to the next one, what they say here. Yeah, third point say, in most of the cases, third point, what is the summary is? So third point, write the summary is, in most cases, no separate framework for single financial statements or specific elements. They follow framework given for complete financial statements. In most cases, that is what the summary of the third point. In most cases, there will not be any separate framework given for single financial statements or specific elements. Whatever framework that has been given for complete financial statements, the same framework will be followed even in the preparation of single financial statements or specific elements also. So this paragraph, you write it there, or else take a screenshot. Later you can write it. Make it fast. I want you to make it fast. Okay, next. Fourth point is simple. There's nothing you can write about it. Just you have to think what opinion will be appropriate, that you have to use it. Next. So whether you can use true and fair view or not, whether you can use the phrases financial statements give true and fair view, or you want to make the use of the phrases present fairly in material respects or not, what factors you will consider. So here the summary of this paragraph is, summary of this fifth point is, 2 factors you will consider in determining whether you can use that phrases in the audit report of the single financial statements present fairly or giving true and fair view or not. Whether you can use that or not, that depends on 2 factors. We need to check standalone financial statements comply with all requirements, and also if required, let me put it this way, if required, provide additional disclosures or deviate to achieve fair presentation. Then in those circumstances, you can make use of the phrases present fairly in material respects, or they are giving a true and fair view. Nothing but fair presentation framework definition they have told here. So this is the 5th point. So take a screenshot once, copy it later. Right, perfect. Next, they say here completely you decide on the basis of professional judgment. The ultimate decision will be taken by the auditor on the basis of professional judgment. Okay, right. Next one. Coming to the next paragraph also talks about the opinion related matters only. So I will tell you summary first. So what extra points they talk about opinion? I will tell you a summary here. They say that in case if you are the same person who is conducting audit of complete financial statements, and you are also the same person who is conducting audit of single financial statements or a specific element of the financial statements. Sir, in a single report, can I give opinion on both? No. If you are the same person who is conducting audit of complete financial statements and you're also the person who is conducting audit of a specific financial statement or single element, sir, can I give in a single audit report, can I express opinion on both? No, you can't express opinion on both in a single audit report. You have to give two separate audit reports. On complete set of financial statements, separate audit report. On the single financial statements, separate audit report you are supposed to give. Okay. Sir, can the company publish complete financial statements and single financial statements in a single document? Like for example, annual report is there. As I have shown you annual report, in the annual report, so much of information will be given. Sir, can the company publish this complete financial statements and single financial statements in a single document? They can publish it. Yes, in a single document they can publish it, but they have to differentiate it properly. They have to keep it separately, differentiate it properly. In the same document they can publish in the same document they can publish complete set of financial statements, and also in the same document they can publish single financial statements also. But what you are supposed to do is you need to differentiate them both. That means you have to keep separate headings. Like for example, first you are giving audit report and complete financial statements. After that, then you will give audit report on the single financial statements, along with that single financial statements or specific element. So you have to divide both in the same document. You can happily publish both in the same document, but divide it properly. Don't mix everything together. Divide it properly in the same document. Give appropriate side headings, give appropriate page numbers, differentiate both the information. Don't club it up together. So like that, they say a few formalities, and even they say one more thing also. Take for example, in the complete financial statements, and single financial statements or specific element. See, in the complete financial statements, if modified opinion is given, or the complete financial statements audit report contain an emphasis of matter paragraph or other matter paragraph. In the complete set of financial statements, there is a modified opinion, and also there is an emphasis of matter or other matter paragraph in the complete financial statements. In that case, am I required to include modified opinion, emphasis of matter paragraph or other matter paragraph in the audit report of my standalone, in the audit report of my single financial statements or specific element also? It depends. There is no compulsory requirement. For example, if auditor who has conducted the audit of complete financial statements, he gave a modified opinion, he gave a qualified opinion. If you are conducting audit of a specific element, for example, you are conducting audit of only accounts receivable. In the accounts receivable, you did not find any misstatement. In the accounts receivable, you did not find any misstatement. You are conducting only the specific element. If you want to give unmodified opinion on that specific element, can you do that? Yes, you can do that. There is no problem. So in case if the complete set of financial statements contains a modified opinion or emphasis of matter paragraph or other matter paragraph, there is no mandatory requirement that standalone financial there is no requirement that audit report on the single financial statements or specific element also must contain modified opinion, emphasis of matter, other matter. No, it all depends on facts and circumstances. If required, then only we will give modified opinion, emphasis of matter paragraph or other matter paragraph in the audit report of single financial statements or specific element. In case if you wanted to give unmodified opinion, you can do it. There is no issue on whatever specific element, on whatever single financial statement you have audited. On that, if you want to give a positive opinion, still you can do it. There is no restriction. We will include modified opinion, we will include emphasis of matter, we will include other matter paragraph in the audit report of single financial statements or specific element only if required. But the standard says one thing here. But the standard specifically says one thing here. What does the standard say? So one specific thing the standard says regarding adverse opinion or disclaimer of opinion. So this point is very important. If the complete set of financial statements are going to contain adverse opinion or the complete set of financial statements contains a disclaimer of opinion, then on the single financial statements or separate element on the audit report on specific element of the financial statements also, you have to give either adverse or disclaimer only. That you have to give adverse or disclaimer only. This is specific requirement of SAE 805. If the complete financial statements contains an adverse opinion or disclaimer of opinion, even in the audit report which you give on single financial statements or separate elements also should contain either adverse or disclaimer. See why? Because when you are giving adverse opinion on the complete set of financial statements, or when you are giving disclaimer of opinion on complete set of financial statements, you are basically trying to say that entire financial statements are wrong. Yes or no? For example, if I have conducted audit of complete financial statements of TCS, see on that complete financial statements, if I'm giving adverse opinion, I'm trying to say that all that financial statements are wrong. If I'm giving disclaimer of opinion, I'm trying to say that I'm unable to verify, I'm unable to obtain audit evidence regarding the entire financial statements. So when you are telling in the main audit report of the complete financial statements, when the financial statements are completely wrong, when you are unable to express opinion on the entire financial statements, do you think will it be appropriate to say on the single financial statements or specific element, the financial statements are that specific element or single financial statements giving a true and fair view? No. Why? Because in the complete financial statements, you are telling financial statements are completely wrong. Then how can you say on a single financial statement, once again, the financial statements giving true and fair view? You can't do that. So one general rule is, in the complete set of financial statements, if it contains adverse or disclaimer of opinion, the single financial statement audit report or specific element also should contain adverse or disclaimer of opinion. But however, there are some exceptions to this rule. There are some exceptions. In some exceptional circumstances, if complete set of financial statements contain adverse opinion or disclaimer of opinion, still we can give unmodified opinion on single financial statements or specific element in some exceptional circumstances. What are that exceptions? We'll try to read it in the material. Generally, if complete set of financial statements contains adverse or disclaimer of opinion, there should be the same kind of opinion on the standalone financial statements or specific element also. But however, there are some exceptions. That means, what do you mean by exception here? If the complete set of financial statements contain adverse opinion or disclaimer of opinion, but still I can give unmodified opinion on my single financial statements or specific element in some cases. What are they? What are those exceptions? We'll try to see it in the standard. Able to get the overall concept? So on the basis of this understanding, let us read this last paragraph also. Forming an opinion and reporting considerations. When forming an opinion and reporting on a single financial statement or on a specific element of the financial statement, the auditor shall apply requirements of SA 700. So when you're preparing the audit report, you have to consider the requirements of SA 700. If the auditor undertakes an engagement to report on the single financial statements or on a specific element in conjunction with the audit of the complete set of financial statements also. If you are the person who is conducting audit of single financial statements audit along with complete financial statements also, you are only doing the audit. Then the auditor shall express a separate opinion for each engagement. On both the engagements, separately you have to give the audit report. You cannot give it in a single audit report. An audited single financial statement or specific element of a financial statement may be published together with entity's complete set of financial statements. If the company wants to publish audited financial statement, audited complete financial statements and audited single financial statement in a single document, they can do it. But what they have to do is they have to differentiate it. You have to give index where you have to give the page numbers and all, where a user will be able to find out the single financial statement separately, complete financial statement separately. In a single document you can give, but differentiation you have to do. Don't mix everything, don't everything club together, differentiate it. Start at a fresh page. Give first complete audited financial statements along with the audit report. Once you are done with that, then start another part in the same document. Give give the single financial statements along with the audit report on that. So you can publish both in the same audit report. We can publish both in the same document. You can publish same in that same document, but you need to differentiate it properly so the user will be able to identify both separately. So if the auditor concludes that presentation of a single financial statement or the specific element of the financial statement does not differentiate it sufficiently from the complete set of financial statements, the auditor should ask the management to rectify the situation. If you came to know that both are getting published in a single document, but they are not differentiated, they are not properly differentiated, I will go and ask the management, sir, you are not differentiating it. Try to divide both the information. Give it in the same document, agreed. but try to divide it, try to differentiate both information. You go and request the management. The auditor shall also differentiate the opinion on the single financial statements or on the specific element of the financial statements from the opinion on complete set of financial statements. As I've already told you, anyhow, you will give two audit reports. In one audit report, you will give opinion on single financial statement. In one audit report, you will give opinion on complete financial statements. The auditor shall not issue the auditor's report containing the opinion on the single financial statement or the specific element of a financial statement until satisfied with the differentiation. So this is related to the fourth point. So as I have told, if the management has not differentiated complete financial statements and separate financial statements, first I will go and request the management, sir, please differentiate the complete financial statements from the separate financial statements. If the management is not doing it, until the management differentiates, you need not issue your auditor's report. You should say to the management, sir, if you don't differentiate, I'm not going to give you my audit report. So you have to insist. Even though they are publishing in the same document, ask the management to differentiate. In case if they are not differentiating, request the management. Till the time they differentiate, you should not issue your auditor's report. You should issue the audit report only when the information has been differentiated. Next one. If the opinion in the auditor's report on the complete set of financial statements is modified, as I have told this part, that means when they say modified here, they are specifically talking about qualified. Why? Because adverse and disclaimer, they have anyhow covered separately. So what if complete set of financial statements contain a modified opinion or emphasis or other matter paragraph? Then what you should do? Let us see what they are trying to say here. If the opinion in the auditor's report on the entity's complete set of financial statement is either modified or they include an emphasis of matter paragraph or other matter paragraph, the auditor shall determine the effect that this may have on auditor's report on a single financial statement or on a specific element of those financial statements. When deemed appropriate, the auditor shall modify the opinion on the single financial statement or specific element or include an emphasis of matter or other matter paragraph. If you see here, may, they're telling the auditor shall modify only when appropriate, when deemed appropriate. That means no compulsion. There is no compulsion if the complete financial statements contain a qualified opinion or if the complete financial statements contain an emphasis or other matter paragraph. There is no compulsion for the auditor of single set of financial statements to compulsorily give qualified. If he deems it appropriate, then only he will do it. If he feels it is not necessary, he will not do it. So here you have to mark this when deemed appropriate, which means it is not a compulsion. Only when required, he will do it. Next. If the opinion on the auditor's report on the complete set of financial statements is adverse or disclaimer. So this is what the second point. If the complete set of financial statements contain adverse opinion or disclaimer of opinion, then what you should do? If the auditor concludes that it is necessary to express an adverse opinion or disclaimer of opinion on the complete set of financial statements as a whole, SA 705 does not permit the auditor to include in the same auditor's report an unmodified opinion on single financial statements that forms part or those financial statements on a specific element that forms part of those financial statements. As I have told, if the complete set of financial statements contain adverse or disclaimer of opinion, generally on the single financial statements and specific element, you cannot issue unmodified opinion. You have to give modified opinion only. But there are some exceptions. What are that exceptions? Let us see. They're telling the logic also. This is because such an unmodified opinion would contradict the adverse opinion or disclaimer of opinion on the entity's complete set of financial statements as a whole. So when you give adverse or disclaimer of opinion on complete set of financial statements, and when you give unmodified opinion on single set of financial statements, it is a contradictory position. You should not do it. But however, if the auditor concludes that it is necessary to express an adverse opinion or disclaim an opinion on the entity's complete set of financial statements as a whole, but in the context of separate audit of the financial statement that is included in those financial statements, the auditor considers it appropriate to express an unmodified opinion only. But sometimes auditor will feel that no, on the complete financial statements I have given adverse or disclaimer, but on the specific element or the single financial statement, unmodified opinion is only appropriate. If you are insisting that no, on the complete set of financial statements, if the auditor is insisting on the complete set of financial statements, I have given adverse or disclaimer. But whatever specific element I have conducted audit in a separate assignment, in that specific element, there is no material misstatement. I want to give unmodified opinion on that specific element of the financial statement, even though I have given adverse or disclaimer on the complete set of financial statements. Generally, you should not give unmodified, but there are some exceptional circumstances. You can do it. You can give adverse or disclaimer of opinion on the complete financial statements and express unmodified opinion on single financial statement or specific element only in exceptional circumstances. Sir, when he can do that? So he can do it only if the auditor is not prohibited by law or regulation. There should not be any restriction on the auditor to do that from law or regulation. That means you should have permission under law or regulation. And the opinion is expressed in an auditor's report. It is not published together with the auditor's report containing the adverse opinion or disclaimer of opinion. Now what they are telling is, if you want to give separate opinion, separate unmodified opinion on this single element or specific element or single financial statement, in that case, both the reports should not be published in a single document. You have to publish it separately. That means the complete financial statements and the audit report on the complete financial statements, it should be published a separate document. And the single financial statements and the audit report containing an unmodified opinion on that single financial statement or specific element, that should be published in a separate document. Both should not be published together. One more condition is also there. The specific element does not constitute a major portion of the entity's complete set of financial statements. On whatever element you want to express unmodified opinion, that should not contribute the major portion. Like for example, if you say revenue, sir, on revenue I have to give unmodified opinion, not permitted. Why? Because revenue is a significant portion of the financial statements. Sir, on depreciation expenses I have been asked to do the audit. On depreciation alone I want to give unmodified opinion. You can do it because it is not a major portion, it is a nominal portion. So all the three conditions must be fulfilled. So if you are giving adverse opinion or disclaimer of opinion on complete set of financial statements, and if you want to give unmodified opinion on specific element or single financial statement, generally you cannot do it. But if three conditions are fulfilled, then you can do it. In exceptional circumstances, you can do it. What are they? Not prohibited by law or regulation. Not prohibited by law or regulation. Then second one, published separately. This audit report and standalone financial statements are published separately, not in a single document, and that specific element not represent major portion of the financial statements. Not representing major portion. This is important. This is important. This part is very, very important. Not representing major portion. This part is important. From here, there is a chance of asking the question. Clear? The C point, you keep it, you mark. This is very, very important. Or mark this all together, 8th point. What will happen in case audit report in the complete financial statements contain an adverse or disclaimer? Then what you are supposed to do, what kind of action you are required to take? This 8th point is very important. From the entire standard, I will say 8th point is very important. What else they say? Even when the modified opinion of the entity's complete set of financial statements, emphasis of matter or other matter paragraph does not relate to the audited financial statement or the audited element, the auditor may still deem it appropriate to refer to the modification in the other matter paragraph in an auditor's report on the financial statements or on the element. See what they're trying to say here is, take for example, complete financial statements are there. In the complete financial statements, auditor has given modified opinion. Take for example, qualified opinion. He has just given qualified opinion. Or there is an emphasis of matter paragraph or other matter paragraph. As I have told, when you are conducting audit of single financial statements or specific element, there is no mandatory requirement in the audit report of single financial statements or specific element also. You are compulsorily required to give qualified. There is no such rule. That rule is there only for adverse or disclaimer. So in case if in the complete financial statements, qualified opinion is there, or emphasis of matter or other matter paragraph is there. In case on the single financial statements or specific element, if you wanted to give unmodified opinion, you can do it. If you wanted to give unmodified opinion, you can do it. You can give the unmodified opinion. But in that audit report on the single financial statement or specific element, you have to make use of other matter paragraph. You have to make use of other matter paragraph. And in that other matter paragraph, you have to mention that in the audit report on the complete financial statements, there is a qualified opinion. Or on the complete financial statements, on the audit report of the complete financial statements, there is an emphasis of matter paragraph, or there is an other matter paragraph. Please go and refer that you have to mention in the other matter paragraph. Able to understand? Able to understand? In audit report of complete financial statements. In audit report of complete financial statements. So if in the complete financial statements, if the auditor has given either qualified or they have included in the emphasis or other matter paragraph, then you need not modify, then you need not include emphasis in the audit report of single financial statements or specific element. You can give unmodified opinion. If not required, you can give unmodified opinion. Then what you should do is you have to use other matter paragraph in that audit report on the single financial statement or specific element. There you have to mention, please go and read the audit report of the complete financial statements, there the auditor has given qualified opinion, or in that audit report, auditor has included either emphasis or other matter paragraph. That information should be highlighted as a part of other matter paragraph. The same thing they say with this background discussion. If you read this paragraph now, it will start making complete sense. Even when the modified opinion on the entity's complete set of financial statement, emphasis of matter paragraph or other matter paragraph does not relate to the audited financial statement or specific element, the auditor may still deem it appropriate to refer to the modification in the other matter paragraph in an auditor's report on the financial statements or on the element. Okay, now see, they say some note point here. What do they say here in the note point is, take for example, you are asked to conduct audit of single financial statement, and for the preparation of that single financial statement, they are following special purpose framework. So take for example, there is a company TCS. They have appointed an auditor. To conduct audit of their single financial statement. Only P&L they wanted you to conduct the audit, and that P&L they have prepared as per special purpose framework. Now, which standards will become applicable? You are an auditor. You are required to conduct audit of a single financial statement or specific element, and that single financial statement or specific element has been prepared as per special purpose framework. Then which standard will become applicable? Here in this case, both the standards will be applicable. Number one, you are required to do the audit as per special purpose framework, so SAE 800 will become applicable, and you are also required to conduct only audit of a single element or a specific element of the financial statement. Even SAE 805 also will become applicable. So sometimes even both the standards you are required to comply, SAE 800 and SAE 805. You might be called on to conduct audit of a single financial statement or specific element, and for preparation of that single financial statement or specific element, they might be making use of special purpose framework. So in those cases, both the standards will become applicable. SAE 800 also will become applicable. SAE 805 also will become applicable. You need to comply with both the standards. Clear? So that's what they try to mention in the note point. Hope you guys are able to understand SAE 805 now. So we almost took 1.5 hours to make you understand this. So hope everybody is clear with this standard 805. Simple one only, but terminology, paragraphs and sentences are very lengthy, but ultimate concept is very, very simple. I tried my best possible extent to make the concept as easy as I could. So with all this background discussion, if you start reading the standard, it will look very, very easy. Damn easy you will feel. Okay. So since we are done with 805, we are left with only one more standard. So that one more standard, we will complete it after the break. We'll take a break for 10 minutes. After the break, we'll complete SAE 810. With that, specialized areas chapter also will get over. So we'll meet after the break. We'll take a break now. After the break, we'll discuss SAE 810.